We're on. We are in the studio and we are recording myself, Graham Brown, with three investors in the house. We're going to talk about Singapore. We're going to talk about startup investment, raising funds, the challenges facing both founders and investors here in Singapore. So, quick round robin, a who's who. We have Stephen Liew Creel Price and Sam Gibb. Welcome back. Welcome you all to the studio. Thanks for coming.
Thank you.
Thanks for having us.
Let's put some stories to the names first. Who's who? So we have the Kiwis and the Australians over there.
Mm-hmm.
So we'll come to you in a minute. Stephen, you're a familiar face on our podcast.
Flying the Singapore flag.
Flying the Singapore flag.
Yeah.
You are Singaporean through and
I
through.
am Singaporean.
But you haven't lived in Singapore all your life.
Nope. I've lived in China for 10 years.
Yeah.
And I just recently returned from Japan.
You had a stint in Fukuoka.
Fukuoka for 2 years.
Startup city.
The most innovative city in Japan.
Yeah. Is that a great claim to fame?
Well, according to the BBC.
It's relative, right? Okay, so you've got an interesting background. You were a corporate lawyer.
Yes.
You worked for eBay.
Yep.
And then you sort of had an interesting sabbatical where you went and traveled the world a little bit, didn't you? When you found yourself and got into angel investing.
Yes.
Did you get into angel investing by chance? Was it something that you specifically went out to do, or what was the story there?
I left eBay in 2014, having spent 8 years with eBay in the legal department. And then I got to know people from this little interesting taxi hailing company called Uber.
Mm.
They were launching in Asia, and they were like, could you help us out? We need to figure out the regulatory landscape. You have been at eBay for 8 years, working in Singapore. You should know what's going on in Asia. Okay, how? How do I go about I want to launch it, How do we go about doing that? What are the problems we have? That really got me interested in the whole startup business.
When was this, 2014?
20...
Right, so it's pretty early in there.
Pretty. So here's a funny story.
That was...
I asked for stock. Even though I didn't really know what the business was about. I mean, when it was described to me, I went, okay, so basically you're a mobile app that allows me to call for a car when I want one. How different are you from a taxi? But, sounds interesting, sounds like fun. And they already have a couple of Uber black cars running in Singapore at the time, which I tried. And I got a Bentley Continental car.
Wow.
Coming to pick me up.
Was that when it was like premium Uber? It was at the beginning, it was like...
Uber black, only Uber
Uber
black.
black, that was it, yeah.
And I think there were like maybe 5 riders that was testing the app. So I keep getting the Bentley Continental. So I was like, okay, this is cool. I want some stock, and they went, no, we'll pay you cash, no stock. So yes, that's one of those things that
it made sense.
I missed.
Yeah.
And I said, okay, since I didn't, maybe I want to. Yeah.
Interesting. That's a good backstory.
Yeah.
Do you think they're good value now?
I do have a buy price for the
Okay,
for Uber. We'll talk about it this after.
Creel, welcome.
Thank you.
So you're from Australia.
I am indeed.
Which part of Australia are you from?
Well, from the country originally, but now I'm residing in Sydney.
Yeah. So how long are you in Singapore for?
36 hours.
Yeah.
I do come up here every 4 to 6 weeks.
Yeah. When are you heading back?
Tomorrow morning, first thing.
Right.
Bit of an investor
intense,
soiree tonight, but yeah.
Yeah. So tell us a little bit about why you're here, because Investable is obviously well known in Australia, lesser known here in Singapore. You're sort of building the presence. Tell us a little bit about the story there.
Correct. Yeah. So we've been investing since 2010 from Sydney, but essentially it's been a global mandate from day one. Really, we've got US investments, Israeli investments, Canadian, New Zealand investments, but we've seen that Southeast Asia, so some exciting stuff happens. We really wanted to create a presence. We've been doing programs here since for about the last 4 years. We've had a partnership with the Beijing government with OTEX, and now we run a pitch competition in 7 countries in Southeast Asia for them, and the winners get to go to Beijing each year, expenses paid. So that's given us a bit of a flavour for what are the startup qualities that's coming through, and we're pretty. It's early days, but we're pretty impressed with some of the markets here, including Singapore. We've now set up a regional office out of Singapore, and we've started to develop our club of angel investors. We're not quite at 10, we're getting close. But yeah, that's what I'm here. We've got a couple of staff here on the ground, but we're just really trying to build the brand, as you're saying, and slowly but surely.
Fantastic. So, Investable, how would you describe it? Is it a syndicate? What's the nearest sort of parallel that you can draw?
Well, we call ourselves a global. Our differentiator, I suppose, is we use programs to do the screening and programs to do the. We have both a fund and we've got a club of angel investors. It's not a syndicate. Syndicates tend to be every time they do an investment, they've got to set up a new structure.
Yeah.
All of the rights they would if they were individually invested. The startup gets all the benefits of only having one investor, like from a fund, essentially.
Yeah. I read something interesting about you.
Oh, yeah.
And
wasn't about Uber, was it?
No. Is it true that you set up like 8 businesses by the time that you left school or something?
Yeah, that is true. Yes.
I read that and I thought, no, that can't be right.
Yeah.
What, Scott? Did you just leave school or something? Did you late
No,
start?
I was at school. It's called, like, I mean, I wouldn't have even known the word entrepreneurship. Like when I set up my first business at the age of 11, where it was sort of like I was a necessity entrepreneur. We're going through a drought. There's no money around. What am I going to do? Selling strawberries beside the road. That went well, built that over 3 years and became one of the main income earners for our family for a while, and then had another 7 businesses when I was at university. Everyone else was getting a job, getting paid $15 an hour. I thought there's got to be a better way, so I set up a landscape. Successful that I didn't end up going to lectures, so I pretty much failed a lot of university, but that's
right. So you would describe yourself
a
hustler.
Yeah.
I mean, we'll talk about that as well in the context of Southeast Asia, whether that sort of exists here as well, because that's a big part of the startup scene, isn't it? Like, can they actually hustle? Can they sell?
Sure.
So I'd be interested to hear your views on that as well. Sam, welcome back.
Right. Thanks for having me again.
It's good to have you here. So
I'm always excited.
No, you don't show it, but you are a pretty active angel investor now who's become a fund.
Yeah.
When people talk about Sam Gibb, Singapore, but you're now sort of taking that to the next level. Is that how you describe yourself?
So setting up Endeavour Ventures to be able to just extend what I've been doing in a more meaningful way.
15. You in the top quartile, doesn't it, of angel investors?
Maybe by.
Why do you think that you've done that many when average angel investors maybe done like 1 or 2? What is it about?
Probably because I care and I actually spend a lot of time in the ecosystem working with a lot of different entrepreneurs, and I set out. Get their fingers burnt and don't want to continue with that. So I suppose I've been a lot more selective about how I've gone about building a portfolio and also being involved. Yeah.
Well, what do we need to know? I mean, I guess this opens this up to everybody about Singapore in particular with the angel community here. I'd be interested to hear all your thoughts, and some of you are deeply embedded in it, some of you are sort of more new to it. But what do we need to know about angels specifically here in Singapore? How would you describe the scene compared to, let's say, New Zealand, Australia, compared to, let's say, the Silicon Valley? So what is particular about Singapore? What have you noticed, Sam?
Actually, I'll turn it over to Creel because I've got my perspective on this, but then I'd be interested to know what, in the time that you've spent here, what do you see are the actual differences mainly between the investors here?
Yeah, I mean, I actually lived in Silicon Valley for a while as well, and I think if I compare what goes on in Sydney, what goes on in San Francisco to Singapore, I think a lot of the early adopter angel investors in Sydney and Singapore tend to be ex-entrepreneurs. They've built a business. Hopefully it's been a tech business, so they've got a little bit of domain experience. And then they're going, okay, how do I foster more companies like the one that I built? Whereas when we came to Singapore, we quickly realized that a lot of the very successful entrepreneurs, you'd still call them entrepreneurs, but they tend to be more property entrepreneurs where the fundamentals of a property business tend to be quite different to a tech business. So they're looking for yields. They're very, very risk conscious compared to your traditional entrepreneur as well.
So that's what I would have said too. Like and a lot of the guys that are getting into the angel investment scene, they're probably executives here too. So they don't have as much experience with how businesses evolve and the problems that the entrepreneurs are going to go through in their journey, which can be really frustrating for an entrepreneur. So, if you're an executive in an established business, it's kind of steady state. You've got the capital to be able to grow, and you probably don't have to ride the really rough seas that you do as an early entrepreneur. So I think it's really hard for the investors here to understand that.
Is it like an empathy? Because they haven't. Can you? I mean,
I don't think it's empathy. I think it's more.
Stephen, you would be from that world, so yeah.
Yes.
How would you stand up for yourself? You guys lack empathy for founders.
I think we just lack the knowledge. So I got into angel investment through a angel network, which was founded in Shanghai by a group of venture capitalists and entrepreneurs. And we have a chapter in Singapore. It's called Angel Vest. And Sam was one of my mentors, actually, I would say. Informally, unofficially, whatever. We went to a few events, and then I would sit next to him and say, okay, is this a yes or a no? If it's no, why? I think we lack the knowledge. And this was back in 2014. I'm kind of surprised that having been away for 2 years in Japan and then coming back, I didn't really see the level of knowledge increasing or deepening.
This is why I got involved in the space when I did as well, because I saw that there was a real gap and there was an opportunity to be involved. And I actually did think it would come up a little bit more quickly as well. I think it also goes to the culture. People here are a lot more afraid of making mistakes. So they don't make mistakes and iterate and continue. And that's a lot of what the early stage investing is about as well. You have to be able to get a feel on the entrepreneurs, and the only way to do that is to get your hands dirty and to make some mistakes, right?
And get burnt.
Yeah.
Blew up, have a few of the investment really go a very, very bad way. It just completely blew out the company.
Have you had a blow up?
2 of them.
And what did that teach you?
It taught me a lot of things, so we now have this internally, between my partner and I, we decided that we are never ever going to invest in a startup that has only one founder.
Right.
No way in hell.
Well, that's a tight mandate.
That's why you didn't invest in me. Was that because of the risk of one founder?
Yeah, I mean both of the startups that didn't work out really had only one founder, one very, very strong personality trying to drive the entire business. And when that one founder decided that I've got enough of this is too much, there wasn't anyone else next to him and her to kind of support.
It's a great lesson learned, isn't it? Creel, what about yourself? Have you had any big blow-ups?
Oh, certainly. We've got now, I think, 74 companies in the portfolio that we've invested. And I can't remember the exact numbers, must be 9 or so, but it's 12% of them I know that guys have done the maths that have blown up. And then there's always some walking dead as well. So I reckon there must be another 6 in the portfolio that are surviving, but we know the end is probably nigh, So, it's rather than, the great thing about, Sam mentioned before the importance of portfolio, it's super important. So if one dies, it doesn't actually murder your returns. But more than anything, it's the missed opportunities. And you think, wow, they were so close, a little bit of extra something, maybe it was a founder or maybe it was just that contract fell through, and you think they would have been away. And we've had a few, the opposite of single founders, that have actually partnership breakups. Nothing kills a startup quicker than warring founders.
Yes.
So we tend to prefer founder teams, but we've now got a psychometric tool, I guess, that we use in order to hopefully predict their chances of blowing up, because that really kills a startup pretty quick.
What do you think, Creel? What do you think are the most important traits or characteristics for founders then, or the founder teams when you're looking at them?
Yeah, we're a bit different to most. So, for instance, we wouldn't have invested in Elon Musk. Elon is uncoachable. So, for a very hands-on,
he might argue that he can. Yeah,
I absolutely love Elon, but I just know through our process, we know he's going to probably be, successful, but we can't add a lot of value to Elon.
Yeah,
it's going to be Elon's way or the highway. As a seed investor, we're quite hands-on. We want to actually have coachable founders, so that's one thing. If they're coachable, the second thing is we need to make sure that they're, then it's a little bit around their industry knowledge. We tend to invest in older founders, to be honest. We're not the 22-year-old straight out of university with a little tech knowledge and an idea. oftentimes there's deep experience. I think our average age is 38 of a founder, which is sort of getting on.
Come on, easy.
Yeah.
Yeah, it's not getting on. I think it's just starting, Creel. Come on.
I've probably got a few years on you, Graham. But,
Now I feel like a dinosaur.
Yeah, okay.
and so other things, ultimately, it's the drive and it's the passion, that type of things. But what's come out of this psychometric test that we use? I mean, Michelle, who runs she doesn't call it a psychometric test. That's the best I can explain it. But essentially, it looks at the attitudes and motivations of founders. And there's 5 things that deeply correlate to success. So she's done her master's on 100 entrepreneurs initially that have built a $10 million business to $100 million, a $1 billion outcome. And one of the things was initiation. You've got to be very quick at initiating something. So rather than plan things to death, you just go straight out there.
Action, yeah, totally.
Just do it.
Yeah. Next thing was focus on money, which is pretty obvious. Yep. Okay, so we sort of get that. They really understand their figures, the importance of generating revenue, that sort of stuff. Another one was a focus on reflection. Okay, right. So they can actually take knowledge and reflect, but they have this sole responsibility. So they're not trying to always look for external factors. They've got an idea and they want to take it to market. And even if people are saying it's not going to work, they still may go.
It's a very hard trait when juxtaposed to the propensity for action as well, because you've got to know when to think, when to go.
Yeah, exactly.
Okay, so we've done 3. What were the other 2? Reflection was the last one.
Yeah. So it's that soul, it's that responsibility. So they're not big on external stuff. And then the 5th one, now you're putting me on I'll have to come back to you.
Resilience.
It's a great memory. It's a great memory. That was the last one. Under pressure. No worries. I mean, we'd love to find out a little bit more about that. Michelle, maybe that's a call out to you to come on the show and share your insights as well.
Yeah, no, it's amazing. We now don't do an investment without putting it through. It's called Fingerprint for Success. We now don't do a investment if the team haven't been through it, because it not only identifies where they might collaborate or blow up, it helps us benchmark, okay, for this particular play they're working on, are they the right people for this play?
Right. You're trying to identify your own blind spots as well, because it's quite an emotional business, isn't it? And you think, I want to invest, and then somebody else comes in and says, hang on a second, you're missing out something. You're almost like steamrolling the deal because you want it to fit, because you just get it and you're in emotionally on that person, right?
Cool. What I love about attitudes and motivations versus psychometric tests is they can change over time. And so that's what, even though we give the feedback to the founder saying, you're a little bit low on some of these things, 6 months' time, they might have fixed that, focus on money, and they've sort of, now we really understand our figures, we know what we need to do financially, etc.
That's interesting, isn't it? Yeah, so, okay. I want to ask you all, because I think this is a key question, and then we'll sort of branch out into maybe some of the thoughts on some of the questions submitted by the founders as well, is we've talked a little bit about this as well, Sam, is that you are really in the business of talent spotting, and you've identified, for example, like how do you identify these traits in founders? And Sam, you spent a lot of time with founders before pulling the trigger. And Stephen, you've also mentioned, for example, like the importance of having 2 founders rather than 1. So it's all really about talent, identifying patterns in people. That's the pattern of success you've seen before, right? It's a bias, a positive bias in a sense. What do you do when somebody walks into the room and they've got like this batshit crazy idea, which everybody's saying, this is just rubbish. Like, if that guy turns up with his pitch deck, just tell him to get out. But he's the guy, he's like the next Uber, he's the next Facebook. I was reading about, I think it was Paul Graham, like when Mark Zuckerberg pitched him, he said, Paul Graham said, look, this is a website for students who sit around doing not very much with not much money. So I'm out completely on that. But he talked about that introspection and the anti-portfolio and all those kind of things that we talked about before. What do you do? Because those guys are the 100, the 1,000x returns. Yet everybody thinks they're just weird.
Yeah.
How do you, because naturally you're going to have experience and that's going to teach you, it looks like this. What do you do about that? How do you identify those people? Or I guess the question is, do you need to? Can you get away with the 10x returns, the 100x returns?
Well, that's certainly our philosophy. Is if you're in Silicon Valley, where if it can't be $1 billion business, even the seed investors are probably not going to invest. They'll do the maths and think, no, it can't be that big. We're not going to invest. We tend to flip that around and saying we're just looking for a 10x return. If we do enough things that could be a 10x, we'll eventually find the unicorns through that. And we've been fortunate to be the first investors in 3 of those unicorns.
Which are those?
Canva,
Right,
out of Australia, Ipsy out of San Francisco, and Brandless out of LA.
And what stage did you come in on those?
With seed stage.
The seed in Canva, right?
Yeah.
And what was that? Were they getting rejected by a lot of people at that stage, and did people get it, or were they sort of an obvious deal?
Well, we're quite lucky with Canva because they were raising out of the US their first round, and the US guys wouldn't invest unless there was at least one Australian investor.
Right.
So Trevor was able to write the first check as the only Australian investor in Canva. Yeah.
That was a bit lucky, though, right?
Yeah, it was.
You had an advantage there, right? And I guess the thing is with American investors, they hardly go out of the valley, do they?
Sure.
I mean, that's the other thing. So
I think they're changing that. It used to be the old joke that if it's not within half an hour drive from Sand Hill Road, they won't invest. But I think if you're, it's a self-defeating thing these days. We look at our business a bit like IMG, the sports management company. The next best baseballer is not going to come from San Francisco. They'll probably be from Puerto Rico or somewhere.
Cuba,
and equally, the best startups like Canva came from Perth. Safety Culture, one of the other great Australian startups, is come from Townsville.
Yeah.
So you need to have this web of talent scouts, and that's why we're here in Southeast Asia. Exactly. We've got partners in Jakarta and Bangkok and now Manila and here in Singapore to flesh out the deals, and hopefully we'll find the next grab or whatever it might be.
So how about you guys, Sam and Stephen? How do you source interesting deals? Because it's quite competitive here in Singapore, isn't it?
It's pretty similar to what Creel is doing. It's really about going out there, building up the network, and spread it across the whole globe, actually, and not just in Singapore, because there's only that many number of deals you're going to see from Singapore.
Yeah.
And if I'm going to pick 1 out of 100, and if I'm just limited to just Singapore deals, I'm not going to get the 100. Which is part of the reason why I spent 2 years in Fukuoka. Because you and I both know, in Japan, it's all about FaceTime. It's all about being there, spending multiple nomikai to build that relationship. So I think after having spent that 2 years there, it allows me to now be able to sit back in Singapore and get deals coming my way from Japan.
Because you invested in relationships.
And I also invested in a couple of startups in Fukuoka. People know that I have a track record in Japan. They know that I will be cutting checks. I'm not just wasting time.
Right. So why do people seek you out, though? I mean, they're not seeking you out just simply because you invest. To have that sort of inbound, that's the magic, isn't it? We have inbound deal flow, which is qualified in the sense that they actually want to speak to you rather than the fact they want to speak to you as like just another ATM for that company. They want to speak to Stephen Liew because they know you have a reputation. What is that? How does that work?
I think, my partner and I, we bring to the table not just the money, but really combine the two of us have 50 years of experience and knowledge in the legal and the finance sectors. And for a lot of startups that are trying to expand beyond their home market, those are the two things that you kind of need right from the get-go. Simple stuff like how do you even incorporate a company in Cambodia, for example? How do you go about doing that? Is it better to structure your company in Singapore versus Phnom Penh if you eventually think of having a IPO as an exit? Which one makes more sense? So those are the things companies from outside of Singapore would seek us out. Within our portfolio of 9 companies, we have a startup in LA. They're currently focused in the North America market, but at some point, the founders do want to come out to Asia and expand. In fact, he's coming out in June to do his fundraising for his A round. So those are the kind of.
So they're based in LA, coming here to do an A round.
There you go, because they want to expand into Asia.
Right, because they want to expand into Asia. Yeah. Right. Okay, interesting. How about you, Sam? How do you identify these deals? Because you have built a reputation, a good one. So you must get a lot of people.
That's it. It's building the reputation, and then I'm more of a farmer, right? I'm spending a lot of time on the ground, talking to people, helping them, mentoring. Very hands-on at the incubators, accelerators around town here. I am more geographically focused on Singapore, Southeast Asia. So I'm not as concerned about missing out on deals that are going on around the world, because if I'm going to be able to get into one of those deals, I probably don't want to be in that deal. And so it's honestly taken me quite a lot of time to start to see the inbound approaches of companies that I actually want to work with and want to be able to invest in. And yeah, it's difficult.
Right. This is what I don't get about you, in a good way, is that you read every pitch deck that somebody sends you.
Yeah, and reply to most of the emails, all the emails too, even if it's just brief.
Yeah. I don't know if that's an exception or that's how it should be, or that's just you, because most people dealing with VCs, they don't even get a response, but you put a lot of yourself personally into it.
Yes, I'm too conscientious. I don't know if this is a strength or a weakness, because
Right.
I will take the time, but maybe that time should be better spent elsewhere, focused on something different. I don't know, but I do believe that there's a lot of value in relationships and people, so that's where I've decided to spend my time.
Even if these people could be time wasters?
Yeah, but you figure that out pretty quickly, right?
Right.
And I have no qualms with telling them, sorry, I can't help you. This is not the right. Like, I had a coffee meeting with someone the other day, he pitched me the idea. It was quite crazy, not in a crazy, this could be great kind of way.
Just crazy.
Just a crazy, like, I want to have nothing to do with this. There are so many red flags here.
That could be great, Sam, that one.
It could be. I'm all right with being wrong with that. But then I told them pretty quickly, like, I'm sorry, this isn't for me.
Right.
And it was,
but you met them for
15, 20 minutes and we're done. So it's not like it's a big deal.
And then Elon came and saw me after that.
Yeah. Exactly. It's getting rejected. What about you? Do you meet Creel? Do you meet? Do you put yourself out there? Do you have a lot of coffee meetings? I'm just sort of wondering what the MO of an investor really is, because people are sort of looking at and thinking, what do I need to be like? Do I need to be sort of filtering everybody, or do I need to be meeting everybody? What's the balance there?
Well, I really respect Sam for the feedback, because what startups need more than anything is brutal feedback. So the VCs that get a deck and go, we don't like it, don't respond, don't give feedback. And there's a good reason they don't give feedback, because then the startup will come back and go, oh, I don't agree with that. And then all of a sudden you're in this exchange. Yeah. But at Investable, we tend to say, rather than say no, we say not yet. And we tell them why not yet, so that the door's always open for them to come back and hopefully fix some of those things. And we've certainly had some good success in reinvesting in things we might have seen 12 months ago.
Right.
But as far as, you go.
Oh, sorry, it's a crucial thing, and I think it's just not done well enough here. People aren't getting the feedback, and the entrepreneurs, they need that feedback. They crave the feedback, because that's how they change, they learn. And yeah, I think too many people are afraid of offending other people, or getting into a dialogue they don't want to get into.
Yeah, that said, I will say about Singaporean entrepreneurs that they don't take the feedback very well, probably because they're not used to it. Compared to, give a bit of tough love here, that's not well received. So we've sort of got to really watch that side of things.
I fully agree with you.
It kind of self-selects, though, right? Because then you get the right kind of people who have the attitude that want to be able to take on that feedback. If they aren't open to that feedback, then it's like, okay, I get it. Maybe you have to dampen it down a bit, but. And then, I think it's a bad thing.
And then to answer your question specifically, Graham, around do I do lots of coffee meetings, etc. So Investable, we sort of have this philosophy that angel investing is part art, part science. On the science. So essentially we look at 1,200 deals a year, and there has to be a way of filtering those 1,200 deals down into a manageable number. So we use the science. And for us, the science is programs. So we'll do one-day workshops. We've got a 3-day investable games where we put startups through 12 challenges, because we don't like the fact that everything's about demo days and 5-minute pitches, and just the best orators are the ones that are getting the cash. So that's my responsibility, is the science, and we try and get it down to a manageable number to feed our investment team 10 deals a fortnight. The investment team meet with those 10 deals, and then they decide to do due diligence on probably about 5, 6. Then they'll choose the 3 that goes to the investment committee each fortnight, and then the investment committee typically invests in 1 a fortnight. So that's typically our model. But I'm fortunately at the science side of things, so I don't have to have many coffee meetings, or 0.
Right, but anybody who comes in through the front end is going to get feedback. Correct. They're going to get some sort of feedback. If they don't get through to the next round, it's like, this is why we're not investing right now.
Well, even in our programs, they're very much, how do we actually be collaborative and work out, what are you doing well? What could you do to improve? Here's some tools you might look at.
Okay. Well, let's talk feedback. I have questions from real founders. They're not made up questions. These are people who are actively raising funds here in Singapore, and some actually outside of Singapore. So I'd like to throw these open and get your feedback, and we'll mention each founder who's asked a question as well, so they get a shout out. And have any of you guys invested in, I suppose, what they call like some kind of social impact startups? Have you done any of that? Like is that a specific group different to normal startups, or you treat them the same?
Well, it's a grey area, isn't it? There's the black to the right up to the white. So the white might be something that's only social and sort of a charity side of things. Honestly, if you're not an impact fund, it's hard to invest in those. Right up to a startup, even like Canva, their worldview is amazing. As far as what they're trying to build and the way they're building it is a really lovely company. But are they a social enterprise? No. But so you've got that
Sliding
extreme
scale, yeah. Gotcha.
So yeah, it's a bit hard to say where do you put the needle.
All right, I think the key part of that is as the founder, how do they package that and tell that story to an investor? Because you're going to come with those kind of preconceptions about what they are, and are they a charity and so on. So I've got one here, and just curious to hear your thoughts on this. David Ward, based in Singapore, the company is the Nurturing Company, and he says we're not a 10x opportunity, we're a 1x opportunity to save the world we live in. All right, okay, there's more, but off the bat, is this going the right way? Do you want to hear more?
Yeah,
You kind of. I saw this question pop up. You kind of limited to then going with social impact funds or investors that are interested in the social impact stuff, because their return profile will be 1x. Like, they're hoping to get their money back and a bit more, and they'll be measuring their return metrics more so on the amount of people that they're able to impact. So then that's more relevant. But then the problem that I have with some social enterprises is sometimes if they were to rethink about how they're building the business, they could do it in a more profitable way that's not extortionate per se, that actually allows them to build a real business, get a real return. And I've seen that done with solar panels in Burma.
Yeah, right. So, I think it's just a packaging thing, how they went about how David describes himself. Like, he could, as soon as you say we're a 1x opportunity, you immediately close it down, don't you, to a specific group of investors. Yeah. And it might not be.
I also think there's nothing wrong with that. What would be wrong is for David to go to investors who have no interest in investing in something that has a social impact and only return 1x. There are investors who are like that. So I think the key for David is really to know what he is creating and what he's really passionate about creating. If he truly believes in what he's creating, then he has to do the research to go and find those investors.
Find the right investors. Okay. Because he's saying here that for all the urgency about our mission, we are struggling to get engagement with angels and VC funds. We have home market sales, international business, solid IP.
As we were talking about before, the level of financial literacy, especially in the angel space, is probably lacking. So then, if you were to throw any business model at most of the investors here, will they grasp it? Won't they? That's difficult. And then you go and throw them like a social impact model, and it's like, nah. Like, if the numbers aren't astronomical, you've crossed off 95, 99% of the potential angel, I would say.
What does he do? What would you advise David to do in this situation?
Well, I haven't spent a lot of time in social enterprise myself before I got back into a commercial business with Investable. It's harder running a social enterprise, no matter how much money you've got, than it is in a commercial enterprise. So if David hasn't got a lot of experience in business or even running his own startup, maybe that would have been a better place to start before going into full social enterprise. It can be really quite tough. And it does attract, unfortunately, a lot of people with rose-coloured eyed look at the view of the world. So therefore, even though they're not trying to make money, they're probably not even going to survive. That's the hard thing.
Yeah. And his background is retail. He's done a number of years in retail and some quite high-profile brands. Yet it seems to me that what he needs to do is find the right investors who can understand the message that he's trying to get across, rather than just the whole market of VCs and angels who are just going to keep saying no.
Which is typical for any startup, to be honest. I mean, it's not just about trying to find any investor that's going to give you the money. It's trying to find the right investor, full stop, that has got maybe deep domain, or maybe overseas. If you're trying to build a global business, for instance, where you've got Japan, Stephen would be a great, investor, because he can open up doors in those markets or tell you why it wouldn't work in those markets, etc.
Right. We need to get names out there. That's the key, isn't it? Because right now people don't know who investors are. They're quite sort of unknown factors, aren't they? I mean, apart from like the word of mouth, which is how it's working, and maybe one or two really high profile investors, that's it. We don't have any sort of database of these people.
We need a podcast show that sort of profiles these people.
That's a really good idea. How about it? That is the genesis of the idea. Brilliant. Okay, next question then. Thank you for that. That wasn't set up, by the way. Body Factor, who's based in Manila, says it's chicken and egg. Right, that's the statement.
I like it already.
Exactly. That's the truism. The investors will say they want growth, scale, and the tech. Then we need the funding to create growth, scale, and the tech. So that's the chicken and egg. We're currently bootstrapping and raising funds from other investors. The company is ecfulfilled.com. I'm not sure what they are, but they say they're raising a seed round. Their challenge, it sounds like, the investors that they're talking to are saying, look, we want to see results, yet they need funds to get results. What do you do?
Unless you have any kind of competitive advantage straight off bat, then you're going to have to prove yourself before you're going to be able to raise external funds, because otherwise the investors are always going to say, well, why you? Why now? Otherwise someone else could just come in and eat your lunch. So yeah, like if it's an execution-based business such that you just have to get the job done and do it before anyone else can potentially do it, you need the funds to be able to do that. Yeah, you've got to prove some traction first.
How do you do that without funds?
I think, we also ask founders to have some skin in the game before we put money into them. So to have the skin in the game, we want to see, are you bootstrapping? How much of your own money have you put into this? Have you tried raising money from friends and family? And we do believe the friends and family is a good skin in the game, because if you have taken 20,000 from the dad or your mom, chances are you're gonna really work really, really hard to make sure that you don't piss off your dad. Or
That goes with you to the grave. That one.
Yeah.
No.
The 4 Fs, the friends, family, fools, and founders. That's some of that money in there, I think, before. And also MVP. I still, it's become a cliche, but trying to start something a little bit more modest, get the traction that Sam's talking about before you then go to a professional investor, and certainly not a typical VC is Series A and beyond. So they want to see traction.
Yeah, I don't know if it's specific to Singapore, and obviously I've had a lot of startup founders come in here as well. Over 100 have sat here and done their sort of long form pitches, and I hear a lot in industry as well. And it seems there's a large number of people out there who, say we need to raise $1 million to build this thing, right? And the MVP was almost missed out. It's like, why don't you just sort of, okay, let's scale this all the way back. Let's cut out all these different features and let's go back to that one thing it does really well, and let's do it for 50,000 maybe. But it seems like, oh no, we have to build this thing. Where is that mindset coming from? I'm missing out on something, because I'm a bootstrapping entrepreneur.
Because everyone's seen the amounts people can raise in the US, and it's like, you're raising it on a pitch deck, you're raising it on a hope and a dream, whatever. And it's like the art of the entrepreneurialism is, boiling it down to the smallest part possible and then proving out from there and building on top of that. So there's probably always something that you can do to make that task smaller, tick that off, and then build out from there. I think that's the right way of thinking about it.
But is there pressure to go big?
One of the concepts we've now discovered that we're sort of anti around, we call it the perfect startup storm. So you might have seen the movie The Perfect Storm, where all of those bad conspiring factors created the worst storm in history. Well, the perfect startup storm is exactly that. If you have these 5 factors working against you, you're going to fail. And that's a first-time entrepreneur, never been in the industry before, launching a business model that's never existed before, where you need critical mass before it's useful for one customer, and you need a large capital investment before you can actually test it.
There's a lot of those around.
Yeah, and there's a lot of those around. If you've got 5 of those, you're going to fail. If you've got 4, you'll probably fail. 3, you might get survived. 2, you might. So it's sort of like, how do you de-risk some of that? If you're a founder yourself, you go, okay, gee, I've got 4 of those working against me. I'll get a co-founder that's from the industry or been in business before. Or I'll start with an MVP that copies another industry type of model. And then if that's successful, then we'll morph into this revolutionary thing that we've got up our sleeve before, But, it's pretty tough if you've got those things working against you.
How do you sort of train that hustle in people to do those things? Is that a skill people learn? Is that a mindset? I mean, we're sort of coming into the Singapore ecosystem now, where there's a lot of very well-educated people, right? But they haven't sold strawberry punnets on the road as kids, right? So, are those people out there? I don't know. You would know better, Stephen.
Well, I sold Newsweek magazine to pay for my law school.
Right. Music magazines.
Newsweek.
Oh, Newsweek.
Yeah.
How many of those did you sell to get into law school? You must have sold lots.
No, getting into law school is easy. That doesn't cost that much money. But going through law school and paying through law school, and that was fun.
Right. Yeah, but is that an exception here in Singapore?
Well, so I've got 200 classmates when I was going through law school, and I think only like maybe 5 of us were living in public housing.
Right.
So
Okay.
go figure. I
So
think,
how-
I mean, I think to come back to your question, I think it takes a generation change. It's going to take a while. For the longest time, the typical Singaporean kid, as they're being raised, they're told that get a good education, get a degree, and then get a government job or work in one of the big MNC multinationals. Don't even think about being a startup entrepreneur. Don't be your own businessman. But now, the kids are being exposed to all of this. They're seeing 20-year-old become, hitting a home run, have a $100 million startup. So they are thinking, maybe I can do the same. But they don't have the entire cultural bedrock, the history of entrepreneurship behind
stories.
them, the stories behind them.
Totally.
So I think there's a lot of education, there's a lot of engagement, there's a lot of exciting them, letting them know that this is possible, but it is only possible if you don't have any of the 5 Fs that Creel was talking about.
Yeah.
Do you think it's a cultural thing, or more because of the location, the geography, that there aren't as many people or students either starting businesses, working in small businesses here, kind of in Asia, specifically in Singapore? Like I don't see a lot that are coming out of university that have some kind of work experience, even if they're just grinded and been a dish pig somewhere, or have had a crack at something.
Yeah, I think it's a cultural thing. I mean, we are, luckily or unluckily, Singapore has become very well developed. We have become rich very quickly within 50 years. And if you look at even the typical public housing resident, a lot of them actually have domestic help. So we're talking about 20-year, kids who have grown up in a family where he or she doesn't even know how to do the dishes because he or she has never done the dishes. How do you expect someone like that to be a hustler?
How do you train it?
It's
How
hard.
do you train
I mean,
that?
this is the big cultural thing, and also with the graffiti, everyone, when people come to Singapore, they're like, "Oh, it's so nice, it's so clean." I'm like, "Yeah, it's great," but then there's another side to that coin. That means that you don't actually have the freedom of expression. People aren't really going out there and trying something different. So, I mean, there's a lot of good things about being here, but it's a really difficult cultural thing that we need to work through to be able to get those entrepreneurs coming up.
So it's interesting that you mentioned graffiti. I own a conservation shop house out in Joo Chiat. The house is at the junction of Joo Chiat Terrace and Everett Road. So those of you who are in Singapore, you want to see it, is at the junction of Joo Chiat Terrace and Everett Road. My shop house has a very beautiful facade, and I hired a very he was an up-and-coming mural artist at the time from Lithuania. Paid him good money, brought him to Singapore, and he painted a beautiful mural on my house. It was also a social experiment because at a point in time, the laws in Singapore actually would consider that a graffiti. And it wasn't something that the government approved or encouraged. So both the artist and myself got into a lot of problems for painting that mural, a beautiful mural, which we took a year to conceptualize, which we canvassed a lot of opinions from our neighbors. Yet, I was actually told to remove the mural.
Painted over it. What was this? Letters, or did they? Did you get the phone call? Come down here and talk to me.
Yeah, I got I didn't get a phone call. I got a letter saying come down here and talk to us.
Whitewash it. Did you have to whitewash it?
Yeah, so I mean, the good thing was my public policy experience actually kind of helped.
Yeah.
And I was like, guys, come on, really? Can we talk about, does this make sense for me to whitewash it? The mural has gone up for almost a month. A couple of international media has already covered it. There were even comments that this is one of the top 10 mural in the world for that year. And if we were to whitewash it, can you imagine the?
Is it still there?
It's still there.
Oh,
so
you
want to go see it.
So there is, but there is a bright side to this whole. There's a positive side to my whole story here. It was the government actually listened.
Yeah.
So the guys that I was engaging with, they were not from the National Arts Council. They were actually from the URA, the Urban Redevelopment Authority. Yeah, the city planners. And these guys actually listened and say, yeah, this makes a lot of sense. So they we actually came to a compromise and have that thing on, and they actually started promoting it themselves. So I think this, I think, to me, speaks of the entire environment that we're in Singapore. This is an environment where you can only do things which are expressly allowed. You can't do things which are not expressly allowed in this country. And we've grown up in that kind of environment. Well, I grew up in that kind of environment. In a place like Silicon Valley, in a place like even China, there's a lot of experimentation. There's a lot of, the kids out there will say, if there is nothing expressly saying I can't do this, I'm going to try it. I'm going to do it. So a lot of Singapore founders that we come across, because of my background as a lawyer, they came to me and say, I would like to invest, but we're not sure if this is permissible in Singapore. So we would also like you to come on board as an advisor. It's like, no, dude, just do it, man. Do it until somebody stopped you.
Yeah, forgiveness, not permission.
That's
That's a
not
hard thing here.
That's not the first step that the
He
typical
has a
Singapore.
passport, remember? We're on pass. We're on.
That's not
work
what a
permits.
typical Singapore founder would do, and that's, I think, what's kind of holding us back.
Yeah.
Yeah.
It's a really fascinating conversation about culture, isn't it? I mean, and especially, I think there's something special about being from different cultures, living in different places, and you see what's real and what's not real. And I don't know. I'm trying to sort of connect that with the whole idea of being an investor in that sort of startup ecosystem, because you know what is sort of the baseline of operations and what is sort of localized, and the fact you lived in Silicon Valley, you're obviously from a different part of the world, you've traveled around, and you've lived in Japan as well. And China. Yeah, and I've thrown myself in. I've lived in a few countries as well. But that sort of, you see, I don't know what it is, but you can sort of, as an observer of people, it comes back to that talent play as well. Yep. You can kind of work out what is the real sort of core behavior of that person, what sort of the local flavor that's sort of that layer on top. So when you're looking at a startup founder and they're talking about blockchain, for example, it's easy to get excited by all the fluff on the outside, but inside, is that entrepreneur real or not? So I'm just sort of going along on my hypothesis. There's something in there.
Well, yeah. So I mean, typically the best entrepreneurs have been the misfits and the the agitators and the rebels and that sort of stuff. So, but what gives me hope around Singapore, I think there's been enough investment into the ecosystem to date. There's been some failures and there's some people that have checked out going it doesn't work. But I think it's that early investment that's going to start paying dividends, particularly when you add into the mix. There is other startups coming in, so if we're investing in Indonesia as an example, we would require that a startup, has their base in Singapore. So you're starting to get a little bit more, cross border, and Singapore's the place to do that. So there's already, it's very multicultural already.
Yeah.
I did quite a bit of work in South Africa, and in the early days, I'd go, wow, it's an amazing founder. And they'd be Zimbabwean nearly every time. But slowly but surely, there's enough Zimbabweans are there and they're growing their business, and the South Africans really started to lift up, and all of a sudden you've got a great ecosystem.
Yeah, I think that's what you're starting to see. Like a common pattern I've seen is, people have one or two cracks, things don't really work out, and it could be the third, fourth crack, whatever. And this is why I think resilience is really important, because they have to be able to keep going and get through the setbacks. But it's like the third or fourth time they crack it, and I think we're getting to that now.
There seems to be also, I mean, those immigrants who came here and seeded the ecosystem, with ideas and behaviors and so on, and now the locals are learning that, like with the Zimbabwean example, I think it's those outsiders that kind of spike and are willing to take really big risks because they have nothing to lose. And then that sort of encourages a next generation to follow and sort of builds up the ecosystem around it as well. I think we're starting to see that happen now, a bit of traction in the local ecosystem with sort of locally born.
Yeah, definitely we're seeing a lot more locally born and Singaporean founders willing to take a crack at it. A lot of them would have either worked in a startup that was founded by maybe a foreign founder. They've tried it for a year as a staff, and they say, hey, if he can do it, I can do it too. There's a little bit of that kind of mentality, which is great. And I think the job situation in Singapore is also kind of a forcing function. As we are producing more and more university graduates, they're finding it harder and harder to find jobs in whether the government departments or multinationals. And it's like, okay, what's next?
Yeah.
You know, if I can't find a job, maybe I want to create my own jobs. You know, I want to create something new, and then we're seeing some of that. So pretty happy that now within 5 months of us coming back from Japan, we made an investment here, and the founder was a Singaporean.
Awesome.
Graduated
Yeah.
from a Singapore university.
All because of your mural. Kicks it off. All right, last question for you chaps before we go. I have a theory, and shoot me down because I feel I might be in the lion's den with this one, is that I believe, and you've kind of alluded to it, that startup founders are weird, a little bit misfits, I suppose. That's why they do what they do really well, and I class myself as one of them. And I think I'm slightly on the spectrum, on the edge a little bit. That's what I think about startup founders. But yet, investors, I think, are 10x weird. The more I've got to know investors, the more I think they are quite strange. I think startup founders are social misfits, but there's something special about investors, that they are even more misfits than startup founders. What is going on? Am I just projecting my own insecurities onto the investment community? Or do you think there's something there? Because you guys, obviously you guys accepted, but there is something about investors that I'm learning is they are a bit like startup founders themselves, a little bit sort of socially awkward. Mm-hmm. What's going on? Have you noticed that as well?
Well, I guess we've got probably slightly more data. We've got like 56 members in Australia, and I think it's now up to 8 in Singapore. But if I look at them to try and generalise, is what you're really asking us to do, is most of them have got a bit of a yearning. It's not just about how do I make money. It's a yearning for how do I be part of something? Yeah. How do I help people? How do I change the world? So I think there's a little bit of that going on, that in order to have the risk appetite, I think there's got to be a bigger motivation than just trying to make money. If you get it right, it's a really lucrative space to make money, but I think there's got to be other reasons that are motivating them to be involved. And oftentimes it's about them, not about the other founders. It's saying, I want to see I'm part of something. Sure, I don't want to start my own business again, but I want to be part of something and watch that grow.
Yeah, I like that. The yearning, something inside. You mentioned something like this before, Sam. Does that resonate with you?
Oh, I said exactly. I was on a panel last week. I said exactly the same thing. It's like I think the people that get involved with angel investing, early stage investing, and they just do it for the money, for the return, because they hear about Uber, it's probably for the wrong reasons. These are the guys who will do a couple of deals, get their fingers burned, and then they'll walk away in a couple of years. It's the guys that really want to be involved, want to help other people out, want to give back in some way. They start from that foundation, that premise of, we want to do something different, be involved, like Creel was saying, and then things can evolve from there. And it's speaking more generally about investors being a bit different.
Yeah, different to what I want. So
I think maybe it depends on the investors that you're hanging out with, and I'd say probably some of the better ones are going to be a little bit different because they're going to have to be able to see the world differently, or at least be willing to embrace that there are different versions of the world and other things that they don't know. If you think about someone who's been through a really traditional career path, then they have been rewarded for doing what they've been told and knowing what is there. It's more or less fixed. They haven't actually had to deal with so much risk and uncertainty. The example that I give is life's more like a game of poker. There's so many unknowns out there. You don't know what you're actually making that decision based on. It's not like chess. Chess, you can kind of work out what the best move is going to be based on positioning and what you think your opponent's trying to do too. But poker, you have far less information.
Very interesting observation. Stephen, do you consider yourself different in that respect? I mean, you were a lawyer in the Supreme Court, so you were like the most
risk averse,
conservative. You were like, you're part of the complex, the whole establishment, right?
I think I do consider myself a kind of a misfit, and also my partner. I think both of us are misfits. We don't fit in. One of our best investment out of the nine portfolio company was a deal actually that went through the angel network that I was in, and all 75 members passed on that deal. My partner and I decided to put in our money, and then I do remember getting a call from a fellow angel, Melody. I don't know if you remember Melody. Yeah. So Melody actually called me and she's great. She was like, "Dude, are you crazy? This is the deal that none of us think is gonna work." And Melody was great. She actually sat down with me, went through the investment report, the financials, and all of that. I said, forget about all of that. I just have this feeling that this guy is going to build something great. May not be this thing that he's been presenting to us, but I don't know, maybe 2 or 3 years down the road, he's going to figure it out, because I think the technology that he's talking about is not even created yet. But I think he's onto something. So we were the first 2 investors that put our money behind him, and 3 years later, it turned out to be a partial home run. I think we're in second base, maybe.
Yeah, that is awesome.
We'll see how it goes.
Yeah, that's good for
That's the
Singapore.
ideal when you're able to think about things a little bit differently from what everyone else is.
Yeah,
Scary.
Yeah.
But
That's a great
Everyone
story.
thought we were crazy.
yeah.
Still do.
Probably.
Awesome. It's been a great conversation. Should we do this again?
Sure.
Next time you're in
Sure.
Singapore?
Yeah.
Yeah, let's do it again.
Yeah.
I think it was a good fun. And I think, great sport, all of you, like for coming in and just being honest and
Maybe we can have like a bottle of wine. I'll bring the wine.
yeah, I mean, maybe we should schedule it a little bit later next time in the afternoon. That would be good. Yeah, I think what I really hope we can achieve by doing this, and I really like this idea of the earning part as well. There's that real need to add some value beyond simply just speculating on the market, because, like you say, it's a lucrative business to get into, but there are many better ways to make money. Commercial real
With
estate,
less work.
yeah, exactly. So why bother? So there has to be that big why in it. So hopefully we get a bit of that out today, attract people who also buy into that. I like what you guys say. I want to find out more about what you do. Be part of what you do, because there's a whole generation of angel investors coming through who want to onboard with the right partners, co-investors, syndicates, platforms, etc. So there's all those guys and the founders as well. It's like put it out there. These are the right people to talk to. That's key as well. The right kind of investor profiles to approach and so on. So thank you so much for sharing your stories today. I had a lot of fun, and I think it was really enjoyable. And we will take more questions for the next one. I think today's questions are a bit easy. So you got off lightly. So we'll have some tough questions next time.
Yeah, I was waiting for something a little bit curlier.
That's why we brought the lawyer into so Stephen can answer the curly
Exactly,
ones.
just to filter them out. He's the gatekeeper. All right,
Okay,
cool.
I'll try my best.
All right, we're signing out. This is Graham Brown. I'm joined by our esteemed panel of guests. We do a quick round robin and how people can find you best. Stephen, yourself? What's the best way to connect with you?
I'm on LinkedIn.
LinkedIn, we'll
Yeah.
put your details. Sam,
Yeah, hit me on the email, the
All
show
right.
notes.
show notes.
Yeah, LinkedIn or investable.com.
Awesome. We're signing out.